Hi everyone, welcome to the next panel discussion. This one is on crypto value drivers. Bit of an interesting topic at the moment, maybe somewhat subjective. The point of this discussion is really just to get the panel members' kind of thoughts and opinions based on their experience as to where value lies in crypto assets at the moment. So my name is Beau. I'm the moderator of this panel. My background is I'm a consultant back in Australia. I consult to cryptocurrency startups, also people in the financial services industry. I also run an online cryptocurrency investment fundamentals course on the Udemy platform, and I also have a YouTube channel, Cryptocurrency Australia. So that's a bit about me. I might pass it on to Ryan on my left.
Hello, everybody. My name is Wang. I'm the founding partner with a Silicon Valley-based VC fund called Outpost Capital. And we invest in early-stage tech startups, especially in frontier technology sectors, so including blockchain companies, virtual reality, artificial intelligence, and drones and robotics. So starting from roughly a year ago, we've been participating in a number of pre-ICOs. And we become half equity investor and half token investors through this process. Happy to share my 2 cents about crypto investments and what's driving the crypto value. Hi.
Great. So I'm Allan Fisch, chairman of Radium blockchain. Radium is a mixed operation where we do our own mining of cryptocurrency, and in addition, we operate our own proprietary trading desk for crypto. Over the last 10 years, I've started 4 technology companies and sold 2 of them, and come to this world from a little bit more of a fundamentalist perspective on the quality of the technology, not only from the trading side on the assets themselves. I see that there is starting to be a flight to quality, and I think this is a perfect time to have a discussion with individuals who are, experiencing this, from the trenches, not just from high level.
Yeah, so a good breadth of experience, I think, on this panel. Especially, I think it's good having people in sort of more traditional investment markets for this kind of discussion. So the first question that I'll start off with, Ryan, is in your opinion, what defines value in the crypto asset market?
I think, basically the value of a token is heavily dependent on the value of the network. So no matter for security token or for utility token, the what's defined the value of that token can be interpreted by how valuable this community, this network it is, right? So so for example, the Ethereum, right? It's a by having its smart contract, it's useful, and the people in the community are actually using smart contract to do ICOs, to play with crypto kittens and all that stuff. And it aggregates a lot of entrepreneurs and a lot of applications on top of it. So this network is very valuable, and this value of the network is represented by the value of the token. And the other thing is, for a value of a specific ERC20 token, which is backed by certain project, I think, most of these projects are very early stage. And when we make our investment decisions, and when we try to justify a fair price for the token, the thesis around that process is very similar to traditional venture capital investment. So we look into the team, we look into the product, the competition landscape, and all the fundamentals to have a broad understanding about where the project are and where is it going to be, how big the market is, and we take all the calculations from there.
And I would say, I would sort of echo actually pretty similarly. You know, we really, on the one hand, we try to do our own analysis of whether the token has sort of real utility within the process of the business that's doing it. And it can be different if it's B2B or B2C. But we're concerned, for example, if in a B2B case, we want to know that there's some trajectory to a customer base, or in a B2C base, we want to understand that the consumers will be rewarded and they will keep using the token in an ongoing way that is useful in the process, and the velocity of it will go up. But we definitely start at the fundamentals. Like we look at, you know, we start at market size, try to understand, is this a big enough market to justify a future value, which, you know, is significant to us. I think we look at the team. We also look at tech pretty closely. We look at GitHub if there is one, or if not, we look at the team that's been on there, the history of what the developers have done. Can they really pull off what they say they're going to do? But you know, as it's our own money, we look at everything. I mean, we look at the macro side. We look at charting, and in different cases, different things matter and different things happen. Sometimes, you know, we need plan A, B, and C that's possible. Maybe this, you know, will be a great utility token and, you know, grow to be a great company. But on the other hand, you know, maybe things will come up in a year that change the trajectory, and we have to be all over that as well, because we're in this very early, and, you know, there is liquidity, which is great as compared to regular venture, where you have a little bit more difficulty reacting quickly to market dynamics.
Sorry, I'm late.
Do you want to give a short introduction? And then the question was just on, in your opinion, what defines value for crypto assets currently?
Sure. So my name is William Bean. I've been doing more traditional investing for 22 years. First as an equity research analyst, so been through a couple different cycles. And then for the last 11 years in venture capital, where I ran China for SoftBank for 4 years. And I was one of the 3 founding MDs for Singtel Innovate, the corporate VC arm of Singtel Group. And then for the last 3 years at SOSV, where we're the number 4 most active seed investor in the world. We invest globally through 7 accelerators. Last year we invested in 167 companies. So I'm more from the trading, capital markets, investment banking side of things. So we kind of got lucky, I guess, and invested in crypto starting in 2015. And one of our more well-known companies is BitMEX. We're the number 1 in crypto futures trading in the world, number 1 in US dollar Bitcoin trading. Today, in the last 24 hours, we did 355,000 Bitcoin in trading volume. And got a couple companies that have done ICO. So in terms of answering the question, I think that through these cycles over the last 22 years, you just have to have a company that solves a problem for somebody. So you can always try and incent them to solve a problem by paying them, whether it's cryptocurrency or coupons or points or whatever. But the bottom line is you need to have a company that solves a problem for somebody. And a lot of that we're missing in crypto side is companies that have a solution to a problem. Right now we have a lot of white papers, or back in the day we used to call them napkins. You know, we write something on a napkin and go out. And what we're really focused on is helping companies put something behind the napkin, solve a problem for their customers. And double-sided marketplaces, which a lot of these ICO companies are very, very, very hard to build. And so where we focus on is helping with user acquisition, and especially user acquisition without paying money for it. So, you know, a lot of the folks out there, they spend a huge amount of money on user acquisition, and they come and then they walk out the door. So if you don't have retention, you're just going to take all your ICO money and flush it down the toilet.
Yeah, some really interesting perspectives there. I guess the way I see cryptocurrencies now, where they're going to go in the future, is I think you're going to have a clear demarcation between community-based cryptocurrencies and investment-based cryptocurrencies. I think the fact that cryptocurrencies now and the ease at which it is becoming to create them, and in the future it will become easier and easier and easier, is you might have governments, you might have communities, you might have groups, you might have regions choose to create their own cryptocurrency and use it within that community. Therefore, it has value to them. It's useful to them. That's the monetary system that they're going to choose to use. From an investment perspective, it definitely, for me, comes down to utility. I think there is a lot of speculation in the market at the moment, but there are a few cryptocurrencies or crypto assets that are really, I guess, leading in terms of the utility. And I think over time, the evolution of utility will continue to increase. There'll be new ideas, there'll be new ways to use these tokens within the platforms. But certainly the tokens, not only the team, the idea, solving a problem, fundamentally very important from the ground up. But the utility of the token is what is going to really drive value, as that token is used in the ecosystem and people aren't just buying it to speculate on its value. So moving into the next question, again starting with Ryan on my left here. In your mind, what proportion of the current market value, it's obviously significantly dropped just over the last couple of days, but what proportion of that do you think is for investment, and what portion do you think is actually utility?
I think if we look at most of the ICO these days, around 80 to 90% of the ICOs, they define their token as a utility token instead of a security token. But the reality is, from the participants' perspective, because there are a lot of retail investors in this space, and that's what's driving the price of the tokens to go up. I think my instinct is that I think 80 to 90% of the investors and participants at this point are still investment driven rather than utility driven. So they are participants because they want to make investment in these tokens, not necessarily actually using these tokens. And I think, as you mentioned, the paradigm is going to shift, and there will be more utility tokens coming up. But it's just at this stage, we are at this bullish market, and everyone is mostly looking to short-term gain rather than long-term value. So I think still at this point, most people are driven by investments.
I would have had a difficulty putting a number on it, but I would have thought definitely, my gut would say probably 2/3 or more of it, have to do with the investment side. And generally, I mean, we're potentially doing a listing on the Canadian Stock Exchange, where it's to retail investors. And I mean, I think the majority of them don't understand what utility is. I mean, they just want to get into this space because they think it's attractive, and they're excited by it. But what I actually think, in addition, I think this is, the way things start. I was mentoring guys like in Canada 4 years ago, who recently did an ICO, the company called Bluezell, for about $20 million here. Real quality, top shelf guys. Nobody was paying attention to this space at all. They couldn't get funding in Canada. And they actually moved to Singapore and relocated themselves. And I think what's excellent, there is something excellent that's come out of the investment side. This area on this space has gotten, sorry, I lost my voice. I was out late last night. The fun part of, I think what's great that's actually come out of this, the fact that the investment side is so robust and getting attention, whether it's positive or negative news, is that more VCs, more investors, more angel investors have actually started to look seriously at the blockchain space and give it a chance to be able to fund it and take the real serious companies who also gain from this momentum that's happening. And what I think that's going to cause, and what I think the real excitement should be, is similar to, to the .com when there was frothiness. A bunch of strong companies actually came out of it. And I look at Amazon as the biggest example. I mean, Amazon exists and dominates, and I don't love them. I've run 2 businesses where they dominated us, but they had zero cost of capital for 17 years. They could build up a big enough business to beat Walmart, which is impossible if you had to actually pay what the market rate would be for capital. But what this euphoria, in my opinion, has done is there's going to be some great companies that come out of this. And I think we should stop focusing on, the investment side, only in the hype. I think it's time to focus on the blockchain. I mean, that's really the bigger thing, in my opinion, that's come out of this.
So as a traditional investor, and I guess now a crypto investor, we have an accelerator called MOX, Mobile Only Accelerator, in Southeast Asia, South Asia, Eastern Europe, and South America. And we're facing a market where Google, Facebook, they control 85% of mobile advertising in the world. You've got 5 Chinese guys who are basically buying up the local leaders and pumping massive amounts of cash. Cash is a weapon. And who's screwed? Well, early stage investors, we're screwed. And the entrepreneurs are screwed because it does not matter how good your product is. It doesn't matter how much people love your product. No one will ever see your product unless you can pay the 20 to 80, 90, $1 per app launch. And the lifetime value of those users are way, way below 20 cents to $1. Okay, so something's got to give. So we're trying on MOX. We've basically built something that's a little bit like the Rebel Alliance, where it's everybody who's getting screwed by Google, Facebook, and 5 Chinese guys. And we cross-promote each other for revenue share. Revenue share has never, ever worked. In the history of business models, it doesn't really work. But when there's no other choice, we think revenue share might have a chance of working. And another thing that's happening is you've got ICOs. People are going to alternative sources of money because in the end, monopolies generally, when you see a monopoly market, you generally have a reaction in the other way. And this is a very large reaction going the other way because bottom line is people don't like to be controlled by 7 companies. It used to be countries, now it's companies.
Yeah, interesting stuff, and I agree with the panel members certainly on the proportions of the speculative side and the utility side. It's a big example, but Ethereum, for example, or even Neo, starting to build these decentralized applications in the ecosystem are good examples or benchmarks for how the crypto tokens are actually used in the ecosystem, and you're having demand being driven by the decentralized applications being built on it. So you're seeing, I think, high utility in those type of ecosystems. So I think whilst they are a large example, they do set a benchmark for how well tokens can be used within those ecosystems themselves. So again, starting with Ryan, next question. How do you believe the market will evolve over time in terms of the speculative proportion to the utility proportion? And do you think the utility value is going to increase and the speculation decrease, or do you think it will stay the same?
I think definitely the utility tokens will increase a lot going forward. And here's the deal, right? ICO is not only a way to raise money, it's also a way to acquire your customers. So basically, the beauty of ICO is not only for retail investors. Now they are able to participate in private projects and private companies, right? But more importantly, for a traditional venture-backed model, for a company to acquire users, they need to go out there and spending all these marketing dollars and to acquire users, and then they need to think about, how can we keep the users onto the platform? How can we make the users sticky users who's gonna come back, right? But through ICO, now the users are able to participate in and contributing into this project, and I think that makes a huge difference. Actually, for a lot of good product, the key users, they would become contributors, and through ICO, ICO is a good tool for them to be participant in addition to just being users. So I think going forward for the utility token, how can you let your retail investors become users and become contributors in this whole ecosystem will be one of the key questions to be answered in order to launch a successful project.
Just to add, I think, in this space, in order the innovation here and what is exciting the world about the potential here is the utility for these companies, and is the ability for a whole different paradigm shift and a different model to happen. Because if you take that away, you can look across these companies, and there's a B2C company or a B2B company across North America that's doing what they're doing without a utility, without a token, and they have a certain valuation which is not even close to anything in this space because it's not as big, it's not a paradigm shift. But you know, if there's a way, which is happening in this space, if there's a way to be able to actually put the utility within these companies and make it part of the process and take away the need to be able to do customer acquisition in a way that's not sustainable and doesn't lead to growth, you know, that is a dynamic shift in technology. And that's what the decentralized nature and the automated nature of this technology and these chains is supposed to be able to do. And there's going to be a flight to quality. It doesn't necessarily mean it's going to be this year. There's still probably euphoria. There's a backlog of a ton of ICOs, you know, that are about to happen. It's probably going to be, I don't know the number, 5 times last year, 10 times last year. But, you know, in the next 2 to 5 years, there'll definitely be a flight to quality. There always has been in technology.
Yeah, so, I mean, if you look at any new market in the world, you start off with amateurs and individuals, and then over time it institutionalizes. And you get, I mean, even in the late 90s, I was covering internet and tech on Wall Street. Bear Stearns, they're not with us anymore. But, and back then, as an equity research analyst, my job was to explain startup companies to institutional investors and get them to invest in an IPO, okay? But the issue was that after the IPO happened, I got a bonus based on the performance of the offering and the fact that the offering got done. So there was a conflict of interest there because I got paid to recommend something. I was not really objective. And you've got the same thing happening now. We've got advisors. People look to advisors as experts because they supposedly know what they're doing, and hopefully they do. But these advisors are also compensated. So there's a conflict of interest. And you got to do your own work. People who invest based on what other people tell them to do without doing their homework, without doing their own work, are sheep. And sheep get slaughtered.
Yeah, very interesting stuff, and I think you certainly can see how tumultuous the market is at the moment is, I think, a sign of its immaturity. And I think absolutely in the next 2 to 5 years you are going to see it start to mature and the quality will rise to the top. Flowing into the next question, really on what is going to drive value. So at the moment in cryptocurrencies, certainly from my perspective, a lot of the people looking for additional information, looking for, say, cryptocurrency reviews, go to social media. The mainstream media from where I see are only really just starting to get involved with it and are either really pro or really against it. So my question is, how important is social media for engaging and introducing people to cryptocurrencies or crypto assets? And how do you separate speculative engagement from utility or real-world use engagement?
So one of the questions that I always ask when I'm evaluating a ICO project is, explain me your token economy. How does your token work? Why do you need tokens? Why do you tokenize your product? So I think that's the key question to ask, because a lot of people can simply say, oh, you know, blockchain is very efficient, blockchain is very secure, but you got to understand why blockchain is efficient or why blockchain is secure. Blockchain as a distributed ledger by itself is not very cost efficient, let's be honest, because you have so many copies of the same data on this whole network. So you could have just say one copy, right? But why do we have many copies? Because the network and the nodes in this network and the participants in this network does not trust each other. And how can we trust each other without a third party? And then we have blockchain technology, right? So I think, you know, for the public media to be able to lead the public into the right direction of understanding blockchain and understanding why blockchain is better and what use cases are blockchain better, and what use cases that blockchain is not better than traditional technology solutions. It's not enough to just say, oh, blockchain is a distributed ledger that is fast, secure, but to make people really understand, okay, well, blockchain is not a block of chains, but it's a chains of block. To really, understand how blockchain work and what kind of cases can we leverage what's good about blockchain. Because at the end of the day, blockchain is not good in all of the use cases. It's only good in some of the use cases, and only by having this type of understanding can the public have the power to tell the difference between, okay, what's a real deal and what does not make sense.
I mean, personally, I think in some ways social media can, generally be, a double-edged sword, but on the other hand, that's the way people have time today to learn things and to understand things. I mean, when I want to learn something new, I go to YouTube and, I see and watch everything I can in a short duration, and I think there's, enough data out there to understand what I'm reading, what is quality, and how to differentiate that, and find, the best materials out there to be able to understand a new area and a new place. And certainly this is not a trivial area to understand. Just explaining the concept to an intelligent person, in my opinion, over a certain age, you have to almost show a movie just to get it through people's heads. On the other hand, there's in the trading world, there's a lot of communication that's going on in social media, and some of it, you have to understand who the actor is that's pushing, that social media out there, because are they convincing you to buy a stock that they eventually want to sell, or are they, really trying to help in some way to understand, what's going on in the market and help you make a decision based on that? So it's like anything else. Like, you have to look at it a little bit skeptically, but you can't blame social media for everything, and social media overall seems to be the way people do consume a lot of data and understand things in such a fast-moving, quickly changing world.
So, I don't know, just some advice, I guess. So when I started doing private investment, we had a fund, SoftBank China India, and we had 50 million from SoftBank and 50 million from Cisco, and we went out and we invested it. But at the same time, I put all of my personal capital into angel investing. I wasn't investing large amounts of money, but the key thing is I invested in a lot of different projects. So the best way to learn about something is to put a small amount of money into it, and you learn by screwing up, okay? So I highly recommend putting a small amount of money into a lot of stuff, because you will generally pay more attention to it if you own a little bit of it, and then watch and learn. It's learned by doing, and a lot of times you have to do it yourself. The other thing is, with people like me, like equity research analysts or advisors or experts, you should track them, track their performance. What do they recommend? What do they don't recommend? I was talking to an advisor friend yesterday, and he's very, very, very careful about what he recommends, because all they have is that reputation as being an expert. And if you send somebody down the wrong path, not only will people, unfollow you, they'll actually blow you up on social media. So it's not like the old days where, we used to recommend a stock and it used to come out and people used to forget about it. Now, there's a lot of people out there and they have very long memories, especially when they lose money.
Yeah, some very, very good points there, actually. Credibility, certainly for myself being on YouTube, is very important for me, and I'm certainly extremely careful about my language and what I say, because whether you intend to or not, people will be influenced by your content. I think too, it's interesting in the social media world because you've got fundamentalists in cryptocurrencies that want to get people involved because of the paradigm shift it represents. So it's a grey area of, how much do you recommend, how much do you push people to move into this new paradigm shift on the way money is viewed in these new crypto assets, and and have them join this journey and not, I guess, overly force them into perhaps making a financial decision that they may come to regret in the long term. And I think in the future, coming back to the utility of the tokens, the challenge for platforms or ICOs will be how to integrate the crypto asset into the platform to get people using it, to get people adopting it in a way where it's completely seamless from what they were doing before. That's I think, is going to be a major, I guess, objective to getting people not involved in crypto assets who have essentially got no idea about what they are, to get them involved and to make it easy and seamless for them. So that flows into the next question here, which is what would be the ideal method for engaging and introducing the public, essentially, to cryptocurrencies and crypto assets? And what do you think some of the major challenges will be in terms of investment, adoption, utility, or even incentives to get people involved?
I think I like to quote what has just been mentioned, that it's always a very easy process to just putting a little bit money in the cryptos to just get started, so that you know what is going on and you are incentivized to keep an eye on it and to try to learn more. And aside from that, I would highly recommend anybody here to read the initial white paper of the Satoshi Nakamoto's Bitcoin blockchain. And I think, no matter what kind of blockchain are we talking about today, everything and every idea has been originated based on that white paper. So if you can really understand that white paper, you already understand 80% of the blockchain, and the rest 20% relies on your idea. How can you combine your idea with what is offered by this new blockchain technology? And then you can think of, okay, now I need to have smart contract. Now I need to make fast payment, or I need to raise crypto cadence or some other use cases, right? So I think to have a deep understanding about blockchain, that's the fundamental. That's a very fundamental. And with that fundamental, you can just use your imagination and use your creativity, combine that with your expertise to come up with some new ideas.
Yeah, I mean, I would agree with that. Understanding, at first what the blockchain is. I would also say that, understanding Ethereum pretty well and smart contracts, at least from the technology side going forward, I actually think that's where the bigger potential is, and more interest is happening. But I think, conferences like this, I think actually watching the companies that are succeeding in this space and celebrating some of the winners and understanding, really why they are on the blockchain and what makes what they're doing better because of the blockchain, and following through on that promise. I mean, there's nothing better than the proof is in the pudding. It's, it's when companies really start, integrating the blockchain into what they're doing and, growing larger, affecting society more. I think the success in this space is going to be determined by, in the next few years, how many good and big companies and quality companies get into it. And I think you're also going to have to get rid of some of this like noise where there's 40 companies doing the exact same thing with an excuse for a token that isn't really justified and isn't part of their process. And to be honest, some of the founders don't don't understand what tokenization process should be within their process flow. So it's, there's a lot of quality has to come to the top here, and it's going to have to for this industry to really have an impact and to grow tremendously.
So one of the most important thing is the problem, and is blockchain appropriate to help solve that problem? And then the second thing that we look at is team. Is this the right team to solve that problem? Do they have the industry expertise? Do they have the understanding? Do they have a track record? Have they built something similar before? Companies are not down to how much money you raise. In fact, actually money oftentimes gets in the way because people think that having a lot of money in their bank actually helps you build a business. You actually have a business, and then money can help you grow it. but the bottom line is you still have to build that base business, solve a problem. So focus on fundamentals. Problem, does it make sense in the context of blockchain? And then the key thing is the team. Do they have what it takes to execute on that plan? So fundamentals.
Yeah, excellent. Well, that's all the questions for the panel. We've got around 10 to 15 minutes left. Might put it out to the audience for questions if anyone has a question. Yeah, grab the mic, sure. I'll come to you second.
Hi. The question I have is around token valuation at the ICO stage or at the earliest stage. When you're evaluating early stage startups, let's say in the SaaS space or something, we're using valuations which may be industry specific. But how are you determining the token value? Is that an arbitrary number? Is it backwards from how much money do they need to get to the next stage? Are you guys using any models when you're evaluating these companies at this stage?
Go first. So early stage valuation is more art than science. Even later stage valuations, when we're doing these IPOs, again, it is generally more art than science. Most of them are bullshit, right? So you just kind of stick your finger in your mouth and you kind of hold it up, and the valuation is what people are willing to pay. So it's more like price discovery as opposed to valuation. And the problem with that is you don't have a lot of data in this case. You have a piece of paper, you have a team, hopefully they built something. They might have users, usually not. And so it's very, very difficult. It's very difficult I'd say the traditional way is how big's the market? Does the platform or product or service have the ability to disrupt that market and take a significant portion of that market? And again, do you think that that team has the ability to execute upon that? So most early stage investors, we focus on large markets where there's a disruption opportunity. And again, just close your eyes and jump.
I agree with everything you just mentioned, and on top of that, I think it also depends on for this specific project, how much money do they need in order to build out the full ecosystem and the full network. So and you know how much you need, you know how much token you're gonna issue, and at the same time, you find a good balance between what you want to get versus what's expected from the investors who's gonna coming up and pay for them, right? So so you find the balance, and it's fair to everybody, and
yeah, so
it's more art than science, as you mentioned.
Yeah, just look at their marketing plan, and hopefully a large portion is not Google and Facebook ads.
Did you want to say anything else?
I think you guys said,
yeah. My 2 cents on that is I think fundamentals are evolving at the moment. The market is so new, it is hard to have science, but I think they are evolving in time. Obviously, the idea how much is going to disrupt an existing business practice is obviously very important. Team is obviously very important. But so is the architecture of the blockchain that they've chosen. Those things, transaction times, the capacity of the network, or what they're expecting in terms of their own transactions and their smart contracts as well. It might be okay now, but as the blockchain they've chosen, is that going to handle the capacity they need in a few years' time? We've obviously got the team in the background is obviously important. Many people are new in this space. Other factors might be token emission. Is there going to be ongoing inflation over time, and what's the rate of that inflation going to be? Token utility, as we've mentioned a lot. The higher the token utility in the platform, the higher probability, if that platform is adopted and used, there's a high probability demand will go up over time. So these are some of the metrics that I think are starting to form, and we're starting to see, I guess, some literature come out around this, some books starting to be written by some very experienced people in this area, but it's certainly something that is still very new and is hard to quantify as well. Any other questions?
So I'm curious about correlation. How do you think correlation to other investment asset classes will be determined in future, and also within, I mean, among the cryptocurrencies themselves? So, you know, in relation to FX, fiat currencies, in relation to the stock market, or even gold, and among the various cryptocurrencies. Like, how do you, I mean, no one knows this, but how do you think that the correlation will be determined?
That's a good question, and obviously it's a new market compared to the stock market, the real estate market, the foreign exchanges, and I think what's interesting is that when we look into deals in this market, and when we decide which one to invest and which one to pass, the difference between the difference of this thinking process compared to traditional VC is that, you know, we also look at this investment opportunity from more of a investment banking kind of role, to see, okay, is this a presentable project or not, right? Because after we getting on the pre-sale, the next thing it's gonna do is it's gonna go to the secondary market, and whether it's gonna doing well in the secondary market really depends on how presentable the project, the company is, right? So I think it's more of a hybrid. So just like traditional VC, we look into the team, the product, the addressable market, and the competition. But in addition, we also kind of take on the investment banker's role and to package it up and to make it more presentable and help them in the following process as well.
I mean, I think when you look at sort of venture markets where things are going at hundreds of % a year, and they're not such a big piece of the economy yet, the correlation is naturally, you know, if it's 200% versus 100% in a worse economy, it's still growing at a rate that has less correlation to most of these larger markets. But, you know, as over time a market grows to be a more fundamental piece of the overall market, then it's gonna follow the rules of economics. And, you know, if this space becomes as big as some people are projecting it will, I mean, the most extreme size I've seen is Royal Bank of Canada says $10 trillion. If this is a $10 trillion industry, I mean, it'll definitely come much closer to that, but it won't be growing at that point at 200%. That's the way I see it.
So I'm really not the expert here. You can talk to the BitMEX guys or read their blog. You know, they offer unlimited trading volume, and on Bitcoin dollar, 100x leverage. So a little crazy, but don't recommend you use it unless you're a professional. But there's 4 or 5 things that we see in the market. Regulatory, so that tends to drive the market. Institutional players coming in, it's small, but you've got some, in the US, you've got the CBOE and the options, CME coming up. Individuals coming on, more individuals coming on through like Coinbase or whatever. Then you have ICO volume. So, you know, Bitcoin might be a little bit like gold. People store their value there. And when there's a lot of ICOs, you know, it kind of sucks money out of the market. Sometimes it comes back as well, like you saw in, I think, December. So, and then, yeah, so there is correlation, but not so much to the traditional market. It's more of these like 4 or 5 different factors that we see moving the market. Oh, and the other thing is traders. So when the guys in Korea decide to lean to the left side of the boat moves that way. So we see that as well. So that's probably the 5th thing. Sorry? Not that we see, yeah.
Yeah, I'm certainly not an expert here as well on this particular topic, but I think given how new this market is, if we do look at just Bitcoin, so Bitcoin I think has been traded now for around 9 years. I think you'll find maybe in the last 12 months that some very slight correlations have started to form. Personally, I believe over time as the regulatory environment I guess, constrains or tightens around cryptocurrencies, if we see the introduction of more ETFs and more traditional investment come into cryptocurrencies, I believe the correlation will continue to increase. When it is, who knows, but I think over time it will continue to. Any other questions?
Hi. Question is, we're talking about value drivers here, and you know, William, you're from the traditional equity analysts. You know, are you guys applying any valuation methods, variation framework, call it DCF, etc. You know, on ICOs? Most of them are utility, but recently, you know, a lot of it can be looked at as securities. A part of it is, you know, a share of income or a share of top line, bottom line. Are you valuing it at all, or just, you know, just purely team, technology, you know, the package, more or less? Is it a number game at all?
So we're a little bit of a non-traditional fund in that we do invest, but we also take equity or equity plus token for our program. So our valuation is generally low, and we're a little bit like Andreessen Horowitz, except at the early stage, in that we provide a lot of value on top of that through the accelerator program and our long-term partnerships. So we're not necessarily buying in pre-ICO or ICO rounds. We're more like an investor plus a service provider. So I don't actually spend a lot of time on the valuation. We're more helping our companies that have a business to raise money, not so much buying in. Again, for us, it's more like price discovery, figuring out what people are willing to pay, as opposed to doing a traditional valuation on that. But you can. When I in the late 90s, I wrote a equity research initiation report on a company called Palm, like Palm Pilot, Palm Computer, okay? And their valuation on that company was $50 billion, okay? It hit it for about a week. It actually went, Palm Pilot was at one time worth $50 billion, and it was 20 times 3-year forward price to sales. So your sales in 3 years times 20. Yeah, it's all bullshit. So yeah, I can make a model, say that your company is worth whatever I want it to say. So that's why in a company with very little fundamentals, it is quite hard. I don't envy ICO investors. But for long-term investors, not the pump and dumpers, but the long-term ones, again, you just have to go back to, are they solving a real problem?
Yeah, good.
So we do equity investment and we do token investment as well, but for a specific project, we won't do both equity and token investment at the same time, because the motivation here is a little bit different. So when you come in as an equity investor, you want the liquidity event to happen, right? And that means either merger or acquisition or a IPO situation. But as a token investor, you want the token to, you want the company to go ICO, and you want the token to be successful in the secondary market, and you can liquidate your position the next day, right? So it's a very different thinking process, and sometimes, you know, what does it mean if a successful company who launched an ICO already, does it make sense for the company to go public someday, right? To go through IPO someday? Does it still make sense? These are questions that yet to be answered. So I think, you know, for us and for my peer VCs, we are still in this. First of all, it's a gray area, right? The regulators are also very sensitive in this space, and for we coming as from traditional VC background, for us it's also a learn by doing type of process. So we do what we can do, and we use our best knowledge and creativity. But at the end of the day, the motivation is right there. So either you do equity investment and you hope for a liquidation event someday, or you come in as a token investor and you just liquidate your position at the secondary market.
Yeah, so we're a little different, but it's mostly because we have a problem in that the people who gave us our money, we have 300 million under management, they expected us to get equity. So we have to take equity in whatever we invest in, but we're fine taking tokens as well. And we put a little clause in our investment docs that says we'll get both, hopefully on a somewhat mirrored basis. Not of all the token, just the team token. The bottom line is if the founders get rich, then we should get rich. And if the founders don't get rich, we should not get rich. So we take common stock, right? So we don't have a lot of bells and whistles, and we don't have a big liquidation preference or any liquidation preference. But if the founders get rich and we don't get rich, that's not fair.
Probably have time for one more question. Richard. Welcome.
Thank you for that. And with regards to these companies who are dealing with ICOs, how are your thoughts on the vesting and holding period of the founders as well as the pre-sale investors as opposed to their roadmaps?
So I don't actually have invested in any ICOs. We've had a bunch of companies do them, and I've helped advise, our portfolio companies do them. But you can take a page from like the old days of IPOs. So what we learned there is that the founders and the venture capital firms and the people who who cornerstoned the deal, you want them to hold. So oftentimes they'll sign a 180-day lockup because without that, you're not going to have confidence in that deal. So I think that it's a tool for management and cornerstone investors and pre-ICO investors and the venture capitalists or the advisors, whoever's involved, to signal to the market that they're committed for the long term and they're not just going to turn around and dump. And so the longer the lockup, generally, I think the better it is.
Yeah, I agree. Basically, the longer the better. Yeah.
Yeah, my two thoughts on that as well is I think you're starting to see that being used more and more. And my read of that is not only do the companies want serious investors, right, but there's also the risk of if the coin is pump and dumped, they could suffer reputational damages on social media, right? You do see that. So whether that's a tool as well to avoid that, to keep people serious and to essentially get people's mindsets in it for the long term, that's my read of it. Well, that's pretty much it for this panel. Thanks everyone for your attendance. Thanks to the panel members as well for some fantastic information. And yeah, that was it. Thank you.